So obviously, when it comes to mortgage rates on homes specifically, we're talking about very long loans here, typically about 15 to 30 years, most of us being on the 30-year end. And so when you're talking about an interest rate being lowered for that long of a loan, you can save a ton of money in interest. And that's great if you already own a home, because typically you can just refinance your mortgage and you can save a ton of money. And most of the time when interest rates go lower, housing prices go up. So at the same time, if you already own a home, you're getting more equity in your home because the value is going up. And if your interest rate goes down, then you're saving more money on interest. But specifically to the people who are looking to get into a home who don't currently have a mortgage, this video is for you, because there is something you have to know about mortgages when it comes to interest rates being a little too low and the housing prices being a little too high. So honestly, in my personal opinion, I don't have a problem with lower interest rates, because if you've got a mortgage, a car, a boat, whatever the loan, if you lower that interest rate, you're typically going to save a lot of money in interest, which just means more money in your wallet to spend on whatever the heck you want. But the point here is that specifically in the housing market, if you're looking to buy a home and the home price is up here because mortgage rates are down here, in theory, you might think you're getting a really good value because you can afford the monthly payment. But when you look at the math side of things, it's not as good of a value. And that's the point that I want to make here. Okay, so let's say that you go out and buy a $400,000 home at 5% interest on a 30-year term. Well, your monthly mortgage payment is going to be about $2,150, and that's not including taxes or anything like that. That's just the base interest and principal. Now let's pretend that the interest rates go lower, quite a bit lower, all the way down to 3.5%, and this causes home prices to go up. So now let's say that the same house is going to cost you $500,000 at 3.5% interest rate for 30 years. Well, now your payment is going to be almost the same. It's going to be about $2,250, so $100 more per month. But the difference is what it's going to cost you overall after the 30-year term is complete. Because overall, on the $400,000 home, when everything's said and done, you're going to pay about $773,000 in total. That's including buying the home and paying all the interest. And then with the $500,000 home, you're going to end up paying a total of $803,000, including interest and the price that you paid for the home, which was $100,000 more. So overall, $803,000 versus $773,000 is a $35,000 swing. So overall, the $500,000 home in this math equation was $35,000 more expensive overall, even though you had the lower interest rate. So in this equation, not only are you going to pay $100 more per month for an entire 30 years, just for that $500,000 home, you're also not considering the fact that you are probably going to pay more in property taxes as well, because the higher the home value, the higher the property taxes. So just keep that in mind as well, because a lot of that kind of stuff you're not going to see on paper, because nobody really knows what's going to happen to property taxes, but we can only assume that they are going to go up over time, and they are definitely going to go up when the home prices go up as well. So in theory, even though you have lower interest rates, if you do have a higher home price, a lot of the time the overall cost can be more when you're done with the entire term of the loan. But all of this has to do with the math. So all you have to do is just get a loan calculator, plug in the numbers yourself, and see if it's going to be a better value or not based on your particular situation. Because a lot of the times the numbers can go the other way, but it really just depends on your specific situation. Now, if you just happen to find this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So if you did get some value out of this particular video, feel free to subscribe. But thanks for watching. Have a great day.